Hello again. Good morning. Good afternoon. Welcome to another Creative Money Mornings. Kind of got to rearrange. I'm in the frame now. How are you? Wherever you're watching it from, welcome back. And thanks again for joining. In this one, I want to get into why I invest, what I'm investing in, and when I started doing it. Because this is something that I think is important for the longer term, and I want to try and give my insights into what I'm investing in and when I started doing it. So, firstly, if you're watching this, you probably know me just as a travel vlogger or a YouTuber. Like, why am I able to start talking about investing and stocks and that side of things? Well, it's just because I've been learning it over the last couple of years, and I want to try and share the information as I'm learning it. I don't want it to be overly technical. I want to make it really easy to follow, and just want to break down the information that I've learned about investing and why you should start investing for the future to try and make your money work for you. And the reason I'm interested in this is because it means that I can still travel and I can still do all the things I want to do, and I can still spend my money on my experience in a really wanted, but then so set aside some of it so I still have that as a cushion for the future. And that's kind of how I see about it. That's how I see it, because it means that even if I continue traveling and doing whatever I want for the next 10 years, at least I've got cushion to fall back on. And I started doing this properly about 2 years ago, is when I started doing something called dollar cost averaging into funds. And all I'd be doing each month is putting away a certain amount of money into funds that would track the market. So then I would get a average return. And basically what this means is I was paying in, let's say it was £300 into different markets. That one would be tracking the UK market, tracking the US market, tracking emerging markets, and just getting that sort of average return over the long term. And if you're always dollar cost averaging in or pound cost averaging in, which is what I was doing, which basically means buying every month, then you get the average price of what you're buying and you get the long-term rewards. So there's a saying that goes, it's not timing the market, but it's time in the market. And you can try and anticipate, like we've seen recently, massive crash and then massive recovery. And you can try and anticipate those big moments and those big events. But over the long term, most investors will lose out to a solid dollar cost averaging and just spending more time in the market rather than trying to take your money out and then put it back in. And that's kind of the philosophy that I started using a couple of years ago, to just dollar cost average in and get the long-term returns. So actually, I made another video about this recently, and I put it up on this channel if you want to go back and watch it. It is why I invest, or something like that. The magic of compound interesting. Go and have a look, because that sort of explains why I was using that strategy and why it works for most people. And the main thing that came out of that is that it doesn't make sense anymore just to keep your money in a savings account, because that money in your savings account isn't going to make any more money for you. And over the long term, it'll be worth less than if you put it in a investment that can get a percentage for you each year. And if you want to go and just play around with the numbers, go and have a look at the compound interest calculators, and you can go and figure out what sort of percentage you would need to be able to make money on your money for the long term. So within this video, I said that I was putting into various ETFs, which are exchange traded funds, and various funds that just track the market. I've kind of stepped away from that strategy right now, and I'm going to share with you why that is. Because that is something that works very well for when there's a big bull market, when it's generally just going up over the long term. And that's how it's been for the last 10 years. Since 2011, after the whole recovery and economic crash and global financial crisis, the market generally had this massive bull period where it was continually going up. So if you just bought a fund and you tracked the market, then you were getting solid returns. Now, from what I've learned and from what I've seen happening over the last couple of months, it seems like that's less likely to happen over the next few years. we've seen I mean, if you track financial markets at all, and if you've looked at investing, you would have seen in March, because of the whole lockdown, there was a massive, massive crash where most things fell 50% or a strong percentage. And it was the biggest crash in 30 years. And it was a big event. So a lot of people saw that as a time to take out their money, and a lot of people exited the market. There was also a lot of smart money that bought back in at that point and then made big returns on individual stocks. If you just bought the market at that point, you still would have got a return, but individual stocks and individual assets massively outperformed just tracking the market. And I think that's kind of my philosophy for how it's going to be over the next few years, because what's going to happen now, or not necessarily now, but in the near future, is there'll be another crash. So let's say the market was going like this, went down, now it's back up. What's most likely over the near future, and this is just personal opinion, but not just my personal opinion, is that it's going to keep going sideways like this for a while, because things are so uncertain. Different countries are going to be closing down and opening up, and there's just a massive amount of uncertainty. So rather than myself just buying funds that track the market, there's no point in doing that, because it's not continually going up over the long term right now. What makes more sense in my eyes is to try and pick some individual stocks, which I've researched and which I've learned about over the last couple of months, that I think will do better in the longer term. And there's something that happens every single time there's a massive world event like this. Every time there's a massive crash or recession or depression, every time there's this real destructive period, there's always these disruptive stocks that come out of it. And all disruptive stocks mean they're basically just technology companies, the newest technology at the time, that come out and disrupt the world as we know it. You see it with the dot-com bubble in 2000, the top companies that came out of that, like Google and Facebook, and they're some of the biggest companies in the world right now. And actually, Facebook was a bit later, but you can see it earlier on with other examples as well that don't come to my mind. But right now, there is an opportunity to pick those sort of disruptive companies that might play a part in the next 10 years of the world. And that's kind of what I've been looking at recently and what I've gone into. And the stocks I've sort of reallocated my money into. Now, I want to be really upfront and I want to be really honest throughout this. And I'm going to do a full breakdown of what I have invested into in a video in the future, and I'm going to show you everything. But right now, because this is just a live with me talking to the camera, I can only tell you about it without actually showing any screenshots. So as a high-level view, I have opted right now for individual stocks and assets, and I've got 50% of what I'm currently invested in, which is roughly about 10 grand, into I'm trying to remember off the top of my head now. I can't remember the individual allocations, but what I have is Tesla, and I bought that near the bottom of what recently happened. Obviously not on the bottom, I wasn't that lucky, but I bought Tesla for around 500, and that's now gone up to around $900 just in the last couple of months. And I see that as a massively disruptive company for the future. I think there's a lot of belief in it, and I think they are moving into markets all around the world. They have a giant factory in China. They're looking at building another one in China, even though they've only just opened that one. They have the Berlin Gigafactory, factories in America. And everything is kind of playing out for it to work for Tesla. And one thing I'll caveat here is that the things that I'm going to tell you about is not financial advice. It's just my opinion, and it's just what I've currently decided to invest into. So Tesla has the opportunity to be this massively disruptive company over the next 10, 20 years. And it does come down to how you believe it playing out. But if you believe the ICE vehicles, or internal combustion engine vehicles, which are basically traditional fossil fuel vehicles, are not going to be as big of a player in the future, you kind of have to decide what you think will be a bigger player in the future. And Tesla is probably, in my eyes, poised to do that. I think Elon Musk put out a tweet a couple of weeks ago saying that the stock is massively overvalued right now. And then the stock actually dropped 10% then, and then it's gone up massively since. So, I mean, it's still a volatile stock. It's still going to go up and down because it is, I mean, it's heavily influenced by a tweet from Elon Musk. And there's a lot of speculative money in it. But over the long term, how do you think it's going to do? And this is where my thinking has come into it. I've decided to buy what I want to have in my investment portfolio for the next 5-10 years. And I'll still reevaluate that. But me personally, if I'm looking at the world and the way we're going, I see Tesla as a player. Another one around that idea is a company called Illumina. And I've got a decent portion of that stock account, which I've picked individual stocks in Illumina. And again, as I said earlier in this, later I'll do like a breakdown of the individual stocks I'm in and the percentage of each. But for right now, Illumina, go and look it up. It's basically a gene sequencing biomedical company, if that makes sense. And I can't explain all the particulars of it, but they have 90% of the market share of being able to read people's genes. And from that, there's a whole range of things you could do in science in the future. But right now, I can't explain it off the top of my head. That would be very difficult. Next up, I have a decent portion in gold. Now, every recession and every depression, or not every recession, every depression, but each time there is a massive effect on the stock market, and this is just going from what I've learned more recently, gold tends to have a big reaction. It happened hugely in 2010 and 11, where gold reached its all-time high, and now it's gone past that very recently, I believe. But the point is that when markets are massively unreliable, when people don't see what's going to happen in the stock market, gold is seen as a store of value. So then people start going to gold to store their money, and gold always has a inverse reaction to the stock market. So if you think that the stock market is likely to go down over the next couple of years, gold is a hedge against it because gold will be more likely to go up. So that's why I decided to put some money there. And as I will always let you know, I'm not an expert on any of this. So what I've also decided to do is put a portion of my money, which I'm trying to just get to make money for me in the long term, into Nutmeg, which is Nutmeg is really easy to use, and it's available to anyone to use. But it's basically just a actively managed fund where people will manage your money for you and invest in companies that they believe will work in the current market, and invest in companies that will make a return for you over the longer term. So with Nutmeg, I've got 30% of what I've invested into Nutmeg, and you can do it dependent on your level of risk. So you could do it if you wanted a really adventurous portfolio, if you wanted just a steady growth portfolio, or really balanced or defensive, you can choose and then put it into Nutmeg, and they will decide what to invest for you based on the level of risk you have. Now, this is a really passive way of doing it. And if you decide to do it that way, then it basically removes a lot of stress from your mind because they're actively going to manage the investments for you. Now, I decided to do this with a portion of it because as much as I'm trying to learn more and more about investing and about the stock market, these are people that know a lot more, and recently they've had good, solid growth, and they've performed well, even though the markets have been very uncertain recently. So I've decided to also put money into Nutmeg, and I also have money in what is called a LISA. Now, in the UK, you can get what is called a lifetime ISA. and this is managed by Nutmeg. I have a stocks and shares lifetime ISA. So if I put money into this lifetime ISA, which by the way, you can only put 4,000 per year, then I will get 25% of that from the government back added into it. It's completely available to anyone. Anyone can do this, and you get that 25% for free back into your LISA portfolio. So I did that last year, and then I maxed out there, and then this year I'm continuing to put it in, because each time I put, let's say, £1,000 in there, the government gives me an extra £250 to add to that portfolio for nothing. They just give it because they're trying to encourage people to, well, there's two uses for a LISA. You can either use it to buy your first home up to £450,000, or you can use it for your pension and you can withdraw from it after you're 60 or 65. So you can't just put it in there and take it out, because if you take it out, then you're going to get what do they call it, a cancellation fee. They're basically, you're not going to get that 20%, 25%. You're going to get a penalty. You're going to get a penalty if you just take it out. But if you put into it and hold it and use it for your first house, or use it for your retirement, which is one of the reasons I'm saving, then you get that 25% on top. And so that's why I've decided to go for a LISA with Nutmeg, and that's still performing well because they are managing it for me. I don't have to think about it. I just pound cost average, dollar cost average into it, and then they do all of the work on my behalf. The kind of beautiful part about that is that even if I put, let's say, £100 in per month, I get an extra £25 on top. So I've made 25% there already because the government paying back into the LISA, and then because it tracks the stocks and shares, you also get the additional percentage on top of that £125. I hope that makes sense. I'm going to explain it more in a future video. To say all of this off the top of my head is quite difficult, and if I get any of it slightly inaccurate, then I apologize, but I'm just trying to go through what I'm doing right now, and I'm going to go through it in more depth in the future. And then the last portion of what I have right now is in Bitcoin. And this is still a controversial asset for people. It's a controversial investment because some people still think that Bitcoin may go to zero. Some people think it's going to go to $50,000, $100,000, wherever you think it's going. It's still very uncertain. It's kind of like a new asset class that people aren't really that familiar with. But I've been learning about cryptocurrency and being within the kind of crypto world for the last few years, since I started out on Steemit and DTube, which was in 2017. I saw how quickly it can change with crypto and Bitcoin, and so I started to play around with it and take a little bit of a punt there. I actually even looked at Bitcoin myself back in 2012 and 13 and wished I'd bought a coin then. I was looking at buying one of these physical coins on eBay back in 2012 when I was at uni, and at the time it's worth £90, and I remember it really clearly. And I almost did it, and I was like, whatever, what's the point? And I was only interested in it because it was cool and it was new, but I had no idea what I was doing, and I didn't end up buying it. And then it came around to 2017, and it all started kicking off again. I learned about Steemit from one of my friends and started playing around with Steemit and DTube and what is now Hive. And I started creating videos for DTube. Now, this at the time, I had no idea. I got in a very good time. I think I got in around September 2017. And then over the next few months, crypto had that massive bull run where, Bitcoin went up to almost $20,000. And I think in January of that year, I made around $10,000 just from making videos on DTube. Now, I wish at the time, and hindsight is always 2020, that I had taken out a lot more than I did. I probably took out around $5,000 or $6,000 at the time, but then I left in around $10,000 in various crypto holdings at the time, which some of them went down over 90%. And that is the volatility of crypto, and that's kind of like why a lot of people are scared of it, because a lot of fingers got burned at that time. But Bitcoin right now arguably has one of the best positions for the market we're in. But the whole reason Bitcoin was invented was because people wanted a independent store of value, an independent way to use money that's not reliant on any real world currency or government. And what we're kind of seeing in the world right now, from my eyes, with the protests in the US and the world effectively being on fire right now, is sort of the perfect market conditions for Bitcoin. And a lot more people are talking about it more seriously now than they were a few years ago. I think you can see a lot more hedge fund managers, a lot of big institutions, and a lot of people really seriously talking about Bitcoin, whereas before it used to be a bit of a joke. So I don't have a lot in it, but I still have a decent, I mean, maybe let's say I have like a few grand in Bitcoin to see how it pans out. And I'm not looking for a quick flip on this for any of these that I've been talking about. It's more for how will this play out over the next 4 or 5 years. And also with all of this, I'm looking to dollar cost average or pound cost average into each of them. So I've sort of made up my mind here that will still adapt as the world changes. But I've made up my mind that these are potentially disruptive stocks and assets that could play a big part in the next few years. So I'm going to average into them and get the best cost over the long term. Now, I mean, it's completely down to you. If you're interested in looking at this, it's completely down to you what your level of risk is, especially with Bitcoin, because I think that's kind of, they call it the zero sum investment, I believe. It could all go to zero at any point. So if you're interested in it and you're interested in crypto, it's worth maybe having a dabble, but it is highly speculative. It could go to zero or it could go a lot further. The thing is with any of this is to only be willing to invest what you're willing to not touch or what you're willing to lose. I think a lot of people recently, in the last couple of months, especially during this whole thing, have started playing around with trading and stocks as a way to make money in the short term. I think there's been more trading accounts in the last couple of months opened in America than ever, and more Robinhood accounts opened in America than ever. And while people can't exactly say why, it's likely because a lot more people are spending time at home. A lot of people don't have much to do, and they're looking at that as a way of making quick money. But that's not the way, in my eyes, that you should see investing. You should see investing separately to that as a way of making money for you and make your money work for you for the future. Now, one of the best ways to do that, and I'll go back to that quote I said earlier, is it's not about timing the market, it's the time in the market. So if you're trying to time it and you're trying to put money in and out quickly right now, eventually you're going to get burnt. But if you spend a longer time in the market and you're investing in the future and you're looking at what might work for the long term, then that's a much better way of playing it, especially if you're dollar cost averaging or pound cost averaging in, because then you're always getting the best price for the long term. And generally, over the long term, markets always go up. I mean, whether or not it's 10 years, 20 years, 30 years, eventually they always do, much more than your savings account will. So there's still a reason to invest, but it just has to be for the longer term. And again, I'll say none of this is financial advice. I'm just letting you know what I'm doing. And as always, do your own research. Like, go out and learn about this stuff. Go and watch more videos on YouTube about this. Go and find other platforms. I've subscribed to one recently called Real Vision, and it's $1 for the first month, where it's usually £200 a year. And they do an in-depth show every day, 30, 40 minutes on the state of the world and where the best investments are and how they see the world going. And these are top investors, top economists that they get in to chat about different things each day. And again, I'm not affiliated with them whatsoever, but it's been really useful to kind of learn this, because this is a great time to learn this sort of thing. If you are looking at an introduction to investing, you've just got like a couple hundred quid here and there that you want to put in, I wouldn't say individual stocks are the best way to do it, because then you're going to get eaten up in fees. Each time you invest, there's usually a trading fee on most platforms. I know like Robinhood in the US, they've now done it without fees. But in the UK, we still have fees where if you put a couple hundred quid in, let's say 13 or 15 pounds of that is going to be a fee. So you've already lost almost 10% when you go to invest. So the better way to do it, if you only have a small amount of money available, is to dollar cost average in and continually pay in, which you don't get the same level of fees and you'll get the best price. Now, Nutmeg does allow you to do this. It's a great way, it's a great introduction to this kind of world because it doesn't charge you any fees and you can just start doing it and start learning more about it. But yeah, I mean, that's all I'd finish this by. I'm going to go into all of this more. And I didn't anticipate at the beginning of this how hard it was to talk through all of that without having anything in front of me. If I could have the numbers and see things in front of me with some slides, this would be a lot easier to talk about because it's all just off the top of my head right now. And I would like to go through it in more depth so I can actually show you, what I'm seeing and show you how you can make it work for you. Let's have a look at the comments. Morning, Ben. Morning, Kabiz. How are you? How important is factoring management fees into choosing managed funds? Yeah, I definitely think it is important. And I would always, this is why I was using index funds before, because they have some of the lowest fees. They have like a 0.3% fee or something because they're just passive funds that don't have active management fees. And if you've got a high management fee, like let's say it's a couple percent, obviously you have to beat that percentage each year. So if that fund makes 5% and you're losing 2% in fees, well, you've only made 3%. So you do have to look at fees because especially in markets that might be going sideways or might be going down, well, it's going to compound your losses and the fees will compound as well. So if you lose out each year, you're losing more than you're actually losing in your investment. Hey, Joel, I'm curious, do you have any friends make money from coding? About to join university this year and actually don't know what to choose. I'm interested in coding. Yeah, I do. I know people that make good money from coding as well. It's not something that I particularly know a lot about. It's not something I've done myself, but it does seem that more and more there are opportunities from coding, and it's a skill that a lot of people don't have. So I think if it's something you can learn and get good at, then it is definitely a marketable skill because it's going to be in demand in the near future for sure, as more businesses are having to transition to being online and as more businesses are figuring out ways that they can make the online presence work for them. There's definitely going to be a demand for coding. So, but again, I would say to people that are thinking about doing anything, just see if you enjoy it, because coding would be amazing to have that skill and to really work hard at it if you enjoy it. But there's no point in forcing yourself to work 10 hours a day at something that you hate. So if you try it and you enjoy it, then it would be a fantastic skill to have. If you hate it, then find something else that you enjoy, because that will eventually also make money for you. Everyday live chat is great. Thanks, Chim Chim. I'm glad you appreciate it. I actually just came off the back of another hour talk as well, so my voice is going a little bit. I was doing a private talk with some other people within YouTube, and yeah, we were chatting about things, and now I finished that like a minute before this, so my voice is straining a bit. Cheers for sharing that info. Do you see silver in the same way you see gold, and do you think there will be a major rival to Bitcoin in the future? Two pretty big questions, and the one thing, because I have been looking at silver personally myself recently, silver usually lags gold over the last 100 years. So when there's a big surge in gold, silver usually catches up. So if you see a big price move in gold, it's likely that you're going to see a price move in silver, because they're both hedges against the market. The interesting thing about silver right now is that the ratio of gold to silver, i.e., where, let's say, once upon a time, gold was worth twice as much as silver. So gold was here, silver was here. Now that's spread over time, and it's now gold has a ratio to silver, or the last I looked, of about 120 to 1. In the last big recession in 2010-11, when gold price really surged, that ratio got a lot smaller. So therefore, while gold price was going up, silver was catching it, and this ratio is getting smaller like that. Now the thing is, will that happen again? Who knows? You can only base it on what we've seen before, and that's what a lot of people are predicting, that it could happen like that again, and that's the general thinking, that maybe it will. But there is also the potential right now that we're in a situation we've never seen before. And all of these cycles that people talk about, and all of those things like that, where, well, last time in the recession this happened, is, I mean, it always happens like that until the first time it doesn't. So you still have to be prepared that it won't follow like that. But I mean, the general idea is that silver tracks gold. And it's something I've been looking at recently as well, is to get into silver as well. But while I have gold, I also have gold and silver mining stocks, because gold and silver mining stocks generally do the same sort of trend as gold, but a lot faster, or a lot more volatile. So that's kind of the play I'm doing with silver. And I haven't bought physical silver yet, if that makes sense. Do you also think there'll be a major rival to Bitcoin in the near future? So the thing is that I've seen with cryptocurrency markets in the last couple of years is that any huge move by Bitcoin, because Bitcoin has about 90% of the market share. So Bitcoin, let's say everything invested into cryptocurrency, 90% of it is in Bitcoin. As far as I know, those numbers might have changed, but the last time I looked, it was around 90%. So then anytime Bitcoin moves massively, the rest of the market also moves massively. If Bitcoin goes up, everyone's money comes out of the other coins and goes into Bitcoin. So all of those other coins go down. And it's been like this for a long term, that any big price move in Bitcoin completely kills your positions in any of the other cryptocurrencies. Now, while there may be some other coins that challenge it in the future, I know lots of people are hugely bullish on Ethereum right now, and IOTA, and I had like Ripple before, and I did have money in them before. Now I'm only really concerned about Bitcoin, because I don't want to actively be managing this, that each time crypto makes a big move, I have to move money out of the other coins I have and put it back into Bitcoin, log in quickly and do all of that. I don't want to do that. That's too much hassle for me to continually do that. So while I think the crypto market is probably going up over the long term, for me, it makes a lot more sense just to leave it in Bitcoin and let that ride. Do I think that there'll be any other cryptocurrencies that will challenge it in the future? Probably, because I mean, that is the way possibly the world is going, into a more of a digital currency. What it will be, who knows? But and can I pick a winner? Probably not. So Bitcoin is a safer bet right now than one of these other more unknown ones that I basically don't know much about, if that answers your question. Oh. Yeah, I mean, I think it's hugely interesting right now. And the point of all of this for me is just to learn more about it too. So while I'm putting money in to try and make money for myself in the future, and I'm just leaving it in there, whatever I put in is staying in for the next 20, 30 years. I'm not planning to take any money out of the market whatsoever. I'm just going to learn more and more how to try and make more for me, so I have that nest egg and that amount set aside that I can use when I need it, or when I want it later on. And the reason one of the reasons I'm doing this channel as well is to continually learn more about it and share the things that I do learn about it. So this I'm putting up right now as an example of where I am and what I think, but that may well change. That's going to change probably next year, and that will change the year after. And I'm going to try and continue sharing what I learn as I learn it. Because this is, I said it in another video, this is one of the most valuable things that you could possibly learn in my eyes. And it's something we're never taught. We're not taught any of this in school, although we should be. And it's just something you have to go out and learn on your own. So as I learn more of it, I want to share it and make it available to people to learn from, so you can also go off and do your own research and learn more about it yourselves. So hopefully, even if I don't get things 100% perfect, it will still inspire you to go and learn more and go and figure out how you can make this work for you in the long term. Yeah, I'm going to leave it there for now. My voice is really struggling, if you can hear that. But I hope this kind of helps give you an idea of what I'm thinking and the way this is possibly going and how it is kind of playing out for right now. But I do think this warrants a more in an explained edited video, so I can actually put down this into a proper structure and show you what I'm really planning to do and the different percentages of where my money actually is. But hopefully that helps. Thank you for watching, and I hope you're still enjoying the lives. Thank you for joining in, and I will see you again tomorrow. Thanks, guys. See you later.